Hello, everyone. I hope everyone's doing well. I'm so sad that we weren't allowed to do this in person. I would love to be there to meet everyone. However, we're going to still make this fun and engaging. My name is Katrisia Reyes. I work for Wells Fargo Home Mortgage. This is our logo. And in order for you to have a better idea of what I do, first I would have to explain exactly what a mortgage is. And for that, I've invited a few friends to join me that you may recognize. Check this out.
Well, all things considered, you did pretty well. Yeah, I think they're going to accept your offer. Yeah, I wouldn't do the mortgage dance just yet. Dear Tim and Moby, what exactly is a mortgage? From John. Funny you should ask. Buying a house or apartment isn't as simple as buying groceries or a new bike. The average home costs well over $100,000. And most people don't have that kind of money just lying around. Instead, they take out a special kind of loan called a mortgage. The bank pays for the house, you move in, and you pay back the loan in monthly installments over many years. Well, anytime a bank lends you money, they're taking a risk that you might default on the loan or not pay them back. To protect themselves, banks require that you put up collateral. That's something of value that they can take in case you default. Collateral can be anything from a valuable coin collection, stocks, bonds, anything worth selling. In a mortgage, the home itself is the collateral. So if you default on your monthly payments, the bank can kick you out of your house and sell it. Well, figuring out the monthly payment is where things get a little mathy. First, we need to know the mortgage's term, or the length of the loan. The most common term is 30 years, which breaks down to 360 monthly payments. Usually, you have to pay for a percentage of the home up front, out of your own pocket. This is called a down payment. The amount you borrow is the cost of the home minus the down payment. This is called the principal. Then there are property taxes, insurance, processing fees, but we'll keep it simple for our example. Well, unfortunately, it's not as easy as paying back the principal. The bank makes money by charging you interest, which is a percentage of the principal. You could say that interest is the cost of borrowing money. If this bank charges an interest rate of 6% a year, by the time 30 years is up, you'll have paid more in interest than you borrowed. Yeah, I know. Anyway, we add the whole thing up and divide that by the number of payments we'll be making. So all you have to do is come up with $1,199 a month and you're home free. Well, you have to look at buying a home as an investment. When you complete a mortgage, you've bought a house. You can sell it and often make your money back. Even if you sell your home before the mortgage is paid off, you get back the portion of the principal you've already paid. That portion is called your equity in the home. But let's get you qualified for this loan before we think about that. In general, your monthly payment can't be more than 28% of your monthly income, or the bank just won't trust you to be able to pay it back. So in your case, that would mean you'd need to be making more than $4,200 per month. How much are you making anyway? Nothing. How do you expect to get this loan? Wait, you can't just print money whenever you need it. You guys, this is so illegal.
So now that our buddies Tim and Moby have explained what a mortgage is, there are different roles that someone who is employed in the mortgage industry can do. So there is the mortgage loan originator. That's the person that takes the application from the client. The mortgage loan processor is the one who collects all the documents needed for the file and gets them up to an underwriter. An underwriter is the person who determines whether or not that loan is going to be approved. And therefore, we will in fact give the money to the borrower in order to buy a home or stay in their home. So two reasons why you would need a mortgage. One is to buy a house, but also if you own a home and you've built equity, as Tim and Moby mentioned in the video, you're actually able to use the equity that you have and take that out as cash to go ahead and make home improvements to your home, or maybe pay off some other loans that you may have and pay them at a lower rate. So those are the two types of mortgage loans that exist. One's called a purchase and one is called a refinance. There's a refinance where you don't get any cash out from the equity and you simply lower your monthly payments and your rate. And also you can lower what's called your term, which is the amount of years you've chosen to pay the loan off by. And then there is the cash out refinance where you do in fact take cash using the equity of your home to, like, again, do some home improvements, which people tend to do after living in a home for several years, or pay off something, maybe pay a wedding if one of your children are getting married, or pay off some student loans that you got in college. There's all sorts of different reasons. So you also have loan closers, which are the people who finalize all the figures for the borrower. And my role with Wells Fargo is something in between a loan originator and a loan processor. So I help both the person taking the application and the person putting it all together so that it is perfect by the time it goes into underwriting. And when we submit it to underwriting, the goal is to, of course, have that loan approved. So you might ask, well, what does it take to get involved in the mortgage industry? And honestly, it doesn't take a whole lot. You don't have to have a college degree, although oftentimes that is preferred, but you can get into mortgage banking the same way that I did. So I don't have a college degree, but I do have a lot of experience in this industry. I got into banking when I was only 15 years old as an intern teller. I used to work at a bank that was called Washington Mutual then. You may now know it as Chase. And I also worked for BB&T, and now I work with Wells Fargo. So I've worked for a few banks, and I have worked in home mortgage for 17 of the 20 years that I've been in banking. So again, there's different ways you can get in the industry. You can either start from the bottom like I did and work your way up, or you can go to college and get a degree and come into it that way. So what are the perks? Why would you want to do this? Well, it is a very gratifying feeling to get people into homes. That's the part of my job that is the most fun, is educating people, letting them know that it is possible to buy a home, and then finally being able to get them to the closing table where they get their key and see the excitement that they were able to actually purchase a home for themselves. So that's a lot of fun. It can be very challenging sometimes because sometimes underwriters don't want to approve your loan and you have to really fight to get them to see it the way that you do. But when you do get it done, it is a very gratifying feeling. Also with refinance, sometimes people are really struggling to pay their mortgage payment because things in their lives have changed since they originally purchased the house. And being able to help them stay in that home by lowering their monthly payments and making things more comfortable for them to afford is a great feeling also, because what you don't want to see is people having to lose their homes. Because unfortunately, if you have a mortgage and you default, which means you stop paying it as you agreed to, the bank is allowed to take that home from you. And that is their right to do so. And you do sign that at closing, agreeing to those terms. And that's not something we ever like to do, right? Another perk for me currently is that my role since the pandemic has become 100% remote. That means I get to work from home with my dog and be close to my kids. Oftentimes I'm not in this office where I'm sitting now. I'm usually actually in my bed, in my pajamas, not in my uniform, and kind of just lounging while I'm able to do my work. So that's a great perk. And the job does pay really well. So in this line of work that I do, given that there's different positions, you can make anywhere from $65,000 a year to well over $250,000 a year as a loan originator if you are doing very well. So there's definitely good money to be made in this industry. So another question, what does it take to qualify for a mortgage? So that is answered in 3 categories. It's credit, assets, and income. So for credit, we have here in the United States 3 credit bureaus. So that means there are 3 companies that are monitoring you and how you use credit, which means anytime that you borrow money that you have to pay back. So that can be a loan, that can be a credit card, that can be even you paying rent, right? The history of how you pay rent. So what the bank wants to see before they lend out tens of thousands of dollars, oftentimes hundreds of thousands of dollars, is that you're responsible and that you pay things on time and in full, meaning whatever that lender is billing you, you pay what you owe every single time, month after month, right? You stick to the agreement that you made with the person who lent you the money. Now with assets, that's another word for savings. So what they want to see is that you have a pattern of savings. You don't spend every dollar that you make, okay? And that you're able to have the discipline to put money aside. So they want to see that if something does change in your life, you have what's called reserves, which is money set aside to meet your financial obligations. So should there be an interruption with your work, like you get laid off, or you decide to quit to maybe pursue something else and there's an interruption in your income, you do have money set aside for those types of moments, or even maybe sometimes medical emergencies that you didn't plan for where you're not able to go to work, right? So they like to see that because they like to see that if something does happen in your life that changes, that makes it more difficult for you to honor your commitment of paying the loan back, that you do have a backup plan, right? And lastly is income. So what they like to see for income is that it's steady. You've been at the same line of work or same place of employment for at least the last 2 years, and the money you've earned for the last 2 years is consistent. Also, we compare that to the debts you already have, so money you've already borrowed, and we make sure that you make enough money a month with work, the work that you do, that you're able to pay what you've already agreed to pay with other lenders, plus the loan that you're getting now and applying for with us, with Wells Fargo. So if you check off those 3 boxes, then that means you are qualified to get a mortgage and buy a home. So another question I get asked is, how do you meet with clients? If you're working from home, do they come to your house? And they don't. So the role that I have is what's referred to as a non-customer facing role, which means I don't actually need to meet with clients face to face. So thank God for technology, because it allows me to interact with my clients without actually having to meet with them in person or at a branch. So that means I do a lot of talking on the phone, a lot of emailing, and that allows me to stay connected with the client without actually having to leave my home or without them even having to leave their home. So that's it in a nutshell. I wish I was there to take questions for you guys. I know that it's a lot of information and it's a lot of grown-up information, because this is something that you're not going to be worried about for some time, buying a house or refinancing a home that you own. But it is a great career. It is something that, again, you can start from one position and work your way up to other positions. You can make good money and even great money depending on how far you go or how good you get at it. So it is a great job. I'm very happy to be at Wells Fargo. Like I said, I've been doing just banking for just over 20 years, 17 years in home mortgage. And I've been with Wells Fargo specifically for about 7 years. Coming May, it'll be 7 years that I've been here at Wells Fargo. And there is nothing that I love more, like I said, than bringing joy to people when they get to buy their first home or are able to stay in their home or make their home even more beautiful using the equity that they have in their home. So I hope that you guys learned a lot today. That was certainly the goal. And again, if you guys have any questions, maybe let your teacher know and they can reach out to me and I can email them back the answers. But I hope you guys enjoyed the presentation, and all the best in your future savings and in your future financial goals. Take care, guys.